Hello and welcome to my next Warren Markets review. Well, today the market reverted to its type with the large cap index being slightly down negative, but the broader markets performing much better with the mid cap index up about almost 1%, and the small cap index up 1.2%, and micro caps about 0.5% up. The advanced decline ratio was 2:1, almost 1,900 stocks being up and about 900 stocks being down. So clearly shows the retail participation in the market. The market went through a midday high and then there was profit booking at the end. Who booked the profits? Well, you look at the data, FIIs were selling about 2,500 odd crores and DIs bought about almost 4,000 crores. So it's been the typical pattern of the market, except for yesterday we saw FIIs buying was probably more of a short covering. The news around the world geopolitical front was no good. The oil remained at around 110 levels. Even now it's trading at 111. The dollar index continued to be strong at about 99.8. The US interest rates further hardened to 4.7 almost, and as well as the Indian rupee borrowing rate also went up to 7.12. So clearly sign of hardening interest rates, and naturally its effect was met on the currency with the rupee depreciating further to 96.53 and the forward premium also expanding to 392 swap points, taking the 1 year forward expectation of the rupee to 100.48, right? So clearly then this was another day that the rupees weakening meant that the IT sector was the best performing sector. As I mentioned yesterday, today was also a third consecutive day of IT being the best performer, and I think over 3 days it has recovered 8%. And this is from a YTD breakdown to 27%. So clearly there is a value-based buying for IT purely on the strength of a rupee expected to weaken because of the core fundamentals of the economy in terms of trade, current account, and fiscal deficit and balance of payments being affected by the rise in oil prices and, of course, the currency effect. So IT is benefiting from that value-based buying, although the overall AI hangover means that it's not yet going to look like a growth sector, but still there is room to grow on the value front. The return of the retail meant that those sectors which fell yesterday, like the rate sensitives like PSU banks and consumer durables and auto and realty, were all marginally better and positive today. What was the underperforming sector of the day? Well, it was surprisingly defense. Normally when retail participates, defense rallies, but today defense saw a little bit of a correction, and on top of it, private banks. I think there was profit booking, and I'm going to attribute this to foreign banks because of the selling in the later half of the day, foreign institutions, sorry, not foreign banks. So FIs, I think, sold off on the private banks, which was almost down 0.75%, and infra was the other sector, which was slightly negative. So the outlook for tomorrow will be also seen from the F&O action. Well, today was an expiry day on the options, so naturally the open interest shot up today. But if you look at the fact that on the futures, FIS seem to have added a net 41,000 short exposures. There was 54,000 short and 11,000 long, so net was about 41,000, which took their net open, short contract position to almost 2.8 lakh. So FIS with the cash selling and with the being short on the futures clearly shows their bearish intention, and in the option side it clearly shows because about 2.1 lakh short calls were there. At the same time, they bought 4 lakh of puts FIS. So clearly, it's a bearish and a protective position from a further fall. So clearly, that outlook is not changing. So I don't think tomorrow will be any different. You will see large caps slightly under pressure due to the FIIs, but there will be retail buying which will still come in and pick value-based sectors. So the news of Mr. Trump's actions will always remain a constant volatility introduced in the market, and hence we all wait with bated breath for the day that there is some conclusion to the war. Until then, this volatile situation is going to continue, and the steady accumulation of very small amounts continues to be the best strategy to follow. Thank you, and look forward to my update tomorrow.